Hello, and thank you for joining me, Fiona Cincotta, Senior Market Analyst at City Index, as we have a look at those numbers from Nvidia that were released after the close yesterday. So, Nvidia beat expectations on the top and the bottom line, and also gave some strong current quarter guidance. But the market was still a little bit disappointed. So, just breaking it down, those numbers further, we saw that EPS came in at 0.68 cents, and that was on revenue of 30 billion. Expectations were for EPS of 0.64 cents on 28.8 billion. Now, the shares are falling after hours. I think there had been, despite, these really strong numbers that we've been looking at, and the fact that the double revenue and earnings have more than doubled over the past quarter. So, there's strong numbers, yet the strong numbers still fail to impress. And I think that's basically just showing us how ambitious and what a hard crowd to please the market is right now, given the exponential strong growth that we have seen in this stock's share price. There are, I think, buy side whispers that there might have been expectations of revenues being closer to sort of 33 or 34 billion, which would mean that Nvidia would need to really dramatically beat expectations in order to impress the crowd, and that didn't really happen. There was also a tiny bit of disappointment as far as margins were concerned, which slipped very slightly to 75.1% from 78.4% in the prior period, but still up from 43.5% 2 years ago and 70.1% in Q2 of last year. So this is not, dramatically disappointing, but when a stock's priced to perfection, any slight disappointments can cause a reaction in the share price, which is what we're seeing. Although, it's not a massive move at all that we've seen. The market was trading down around 6% lower at one point, but currently it's just modestly lower in the overnight market. I don't think this is a reason to be negative on Nvidia. I think the demand is still strong. There's no indication that demand is waning for its graphic processing units, the GPUs, which is basically the core of its infrastructure for developing AI models. And I think, they're expected to ship several $1 billion worth of chips. Also, as far as demand is concerned for Blackwell chips, which is the next generation chips, that's also supposed to be very strong. So now I just think this is the market was getting a little bit carried away with what to expect, but I think there's still some reasons to be upbeat as far as Nvidia is concerned. If we just have a look at what's going on in the share price here, we can see that it is still really consolidating below that 130 level. It's failing to move over that falling trend line, which goes back to the June all-time high. Market is going to want to see a rise above that trend line and 130 in order to bring 136 and 140 all-time high into focus. On the downside, we've got this 50 SMA, which is offering support there around the 120 level. That would be a level just to be watching out for. Obviously, we saw that would be the one to be watching out for on the downside. And if we do get a break below that, there isn't really that much until, as far as support's concerned, until we get down to the $100, just below the $100. So thank you very much for joining me. I hope you liked what you've seen. And if you do, then please do give this video a like and do follow me to do subscribe to get more videos like it. Have a great day.